Heavy metals weighed on already worried investors in the local bourse as resources led the way down. I spoke to Marcus Padley from Patersons Securities earlier. Well, Marcus Padley, a global flight to safety, that pretty much swamped the local market.
Yes, it did. We were down 31 points, but within that you actually had to look at the stocks or which sectors resources got smashed. And it is flight safety. US bonds, US dollar going up. Perversely, the US dollar is a safe haven. On the back of that, of course, we've seen the Aussie dollar go through parity, and now everyone's downgrading their forecasts. And we're seeing any sort of risk assets, which includes commodity currencies like the Aussie dollar, commodity prices, which are all priced in US dollars, going down. Copper price at a 4-month low, oil price a 5-month low. It's not a good look. And on top of that, we had those industrial productions numbers out of China, which were disappointing.
So that's what's driving this smash of resources, is it? It's very much the China story as well as commodities.
Yeah, but it's all appeared in a week. It could disappear in a week, of course. But if you look at the falls in nickel stocks, iron ore stocks, even uranium stocks, absolutely smacked today. It doesn't help with Mirabella having a nickel stock having a large capital raising to basically stay in existence, and Kagara recently went into administration. There's a commodity price at which some of these companies just don't make any money.
Sharp drop in the gold price. How did that play out?
Well, the gold price is falling as well. It's under $1,600. It's broken a multi-year uptrend support line now, and that's really all you can go on with gold. The debate is whether it is actually a store of value and a safe haven, or whether it is in fact just a speculative commodity price. I don't think it's a store of value, because that's only really works in an Armageddon scenario where we're down to shotguns and baked beans. I think it's just a speculative commodity which has been pushed up by ETFs, which have bought a lot of gold over the last 7 or 8 years. And if they suddenly decide to change their minds, all hell will break loose in the price. So sliding away, and gold stocks going with it.
And finally, clothing and footwear company Pacific Brands looks unable to find any friends at the moment.
Yeah, they've told us that bid approach they had in January this year from KKR, private equity firm, doesn't look like it's going to end up in a definite bid in the short term. Share price has fallen. They're about 58 cents. Prior to the KKR approach, they were about 50 cents. So there's a bit of downside left. But I think what it does tell you is that in this market anyway, and with the risk in Europe and in financial markets generally, private equity is shutting up shop and is not going to do anything gung-ho whilst the market does this. So, Billabong was down as well. Anyone that's had a private equity approach or rumours of are going to struggle in this market.
Well, if the gold ETF market goes to hell in a handbasket, we heard it here first. Marcus Padley, thank you very much for talking to us.
My pleasure, Ticky.